Good morning, everybody. This is Joe Cusick from the Cusick Group. Finally, TGIF. It's Friday. We had non-farm payrolls come out, and they surged in July. Expectation was around 188,000. Actually, new jobs 255,000. Now, the reaction to the upside for the equities. All right, I'm not too surprised, but I am a little bit surprised the fact that we didn't rally with more strength. And I'll get into that with the equity story, but the bonds, the markets haven't reacted like I thought. We actually see that yields are up slightly in the 10-year, but again, not up what we would think after seeing payrolls just go off the charts. And I think there's a little bit of a tail inside that number, which is this. The amount of people that are actually just not looking for work anymore is up dramatically. And so I think these numbers are a little bit skewed, and I think that's why you've seen somewhat of a muted market reaction. Now, yes, with the 10-year up at about 1.54%, you see that the S&Ps are up 17. That is impressive. You see that the Dow Jones also hitting new highs. Again, you see those two indices on the equity side at new highs. You see the Dow Jones, the NASDAQ, it's up, and actually you've seen some really solid leadership this week. That's been the catalyst going into the number. And with technology being one of those offensive leading sectors, we've watched the semiconductors, we've watched electronic equipment, as well as software and internet names all performing exceptionally well. And they're going to continue to need to actually challenge and break through the July 20th, 2015 all-time high. To me, if we don't see that level being broached on the NASDAQ, that's going to put a big question mark on any further relative strength going into any market rally across the board. And I want to see that relative strength continue and also broach in technology. Otherwise, I'm going to put the brakes on any type of additional size that I'm going to put to any rally that I see going forward, especially in the short term. Financials are going to be another sector that I'm going to keep an eye on next week, especially since now that we're getting through most of the earnings cycle. And again, impressive as it was. But financials, they've been the weak link. And they have been performing up now into this number that we've seen that's been impressive on payrolls. Again, we're going to need to see that 10-year yield get well above that 1.6, 1.7% before we're going to start to see the financials really get some robust movement to the upside. If I see that the 10-year starts to get a little weak here and starts to pull back from the levels that it's on right now, in other words, yields start to peel back and prices start to go up, that's again another red flag for me, and I'm going to keep an eye on that going into next week. Also, watch the insurers. We saw that life insurance names have been under a ton of selling pressure. They've held up today. They've bounced off of those lows that were established. So names like MetLife, Manulife, Prudential, as well as the likes, they were down anywhere between 4 and 5%. Obviously, there is some concern about how the annuity business, which was brought to light yesterday, is impacting a lot of these different firms, as well as what's going on with the interest rate markets. So it's going to be very interesting. Those are the areas that I want to watch going into the weekend and going into next week. So that's it for now. I want to wish everybody a great weekend. We'll talk to you next week. This is Joe Cusick from the Cusick Group, wishing you a great weekend and a great trading week next week. Take care.